Hi guys, alright, quick update for Bitcoin and the major markets. I wanted to have a quick look at this because there's a few interesting things which are going on today. So before I go on, just to let you guys know, if you guys are interested in joining a couple of things, this is the weekly subscription service. Just follow the link in the description, financialfreedom007.com, so you get access to the secret Facebook group, and then twice a week, Wednesdays and Sundays, I send a video over Dropbox as regards to all the altcoins, Bitcoin. I also, during the course of the week, update on Facebook as regards for things that I'm seeing in the market, so you get a more of a personalized service. I also look into the major markets, and occasionally we do webinars too, free of charge. So just go to the website, press the sign me up, and then you sign up to the weekly subscription for that. Also on the Shopify store, I'm now accepting crypto payments, so you can get through. This has everything which I've done over the last 10 years, really. So it's got all of my tutorials, Elliott Wave, Wyckoff, psychology, and it's got all of the recent webinars that we've done. So Digibuy and ECF, that's a very popular one. There aren't many of these left, and then there's also a strat which we've had a look at with crypto AMD, and then these other webinars which I've done myself on oscillators, Elliott Wave, as well as risk and trade management, which is very, very important. So I am now accepting crypto payments, so you just click on whichever one you want to buy. Don't press PayPal, press checkout. It will then ask you for some basic information, which you fill in, and then when you go into continue to payment method, one of the options will be Coinbase, for which you can pay in Bitcoin as well as Ethereum. So that's just something to have a look at. There is also a discount code which is floating around, which is Bitcoin, just BITCOIN, and that will be for the next couple of weeks, and that will be 50% off all of these products if you want to have a look. So I am now accepting crypto payments. As regards for the weekly subscription service, I'd rather it's through PayPal, but I am now also accepting crypto payments for this. There's no real link for this. If you want to pay via crypto, just get in touch with me on the email financialfreedom007@outlook.com, and I'll give you what the month upfront fee is, and that'll be per monthly basis. So given that we're now going into May, I'll do for the whole of May, and then we'll do June, July, and so on. So if you do want to pay in crypto and you want to join the group and get the weekly service, then what you need to do is just get in touch with me over email. But for the Shopify store, everything is all automated. And another webinar might be coming along in the next couple of weeks or so, perhaps in a month's time, on EOS and BitShares. So that should be very interesting. We're just hoping to get something together. Might not be in the next couple of weeks, but I'm sure in the next maybe 4 or 5 weeks or so, I'm sure we can sort something out. So a lot of interesting stuff going on. So but yeah, so Shopify is automated, and weekly service, just get in touch with me over email. Now let's go into the chart. So as you guys know, I'm not convinced by this move in Bitcoin, and I haven't been so for quite some time. I feel there are better buying opportunities. Now, the one count I was considering or having to think about today was this might all be a very large triangle formation, right? So something like this. So this X wave doesn't have to be a flat. It doesn't have to be anything really. It can be any one of the patterns. So this could be a possible count which is going to happen. This is not my primary count, but this is just a possible explanation of what the X wave might be. So what we're going to have is essentially a WXY to form a W, an A, a B, a C, a D, and an E to form a triangle X, and then we're going to have this WXY. So in the end, the end point is, you know, I know I said 2496, but we're looking at least 4200 on Bitcoin. That's the next Fibonacci, and there's a lot of support at 5000 and below. So in the end, we're going to go to sub 5k. I feel there's better buying opportunities available, but that might be the long drawn out process of this X wave. So that's just something that I'm considering. I'm not saying it's going to happen like this, but it's possible. It's possible only because this is 3 waves, this is 3 waves, and this looks a little bit 3 wave-ish too. It doesn't look very, very 5 wave-ish. and it also bounced off the 61.8, which is quite typical of the C wave of the triangle leg. The other count is it's a regular flat, which is going to be here, here, followed by here, in which case the X wave is here. So either way, it's something just to watch out for. I'm not shorting Bitcoin at this particular moment. I'm waiting to see what it does. It looks as though it wants to go lower, maybe retest this line, and then go back up again. Then we'll have to wait and see how high it goes. It might not even reach as high as here because it's so weak. But then we can then put on the short on the E wave. So if it does turn out to be an A, B, C, D, E, you wait for this move down, wait for this move up, and then the short position will be here. So that is one possible count that the X wave is a triangle. Now that does differ from 2014 because the 2014 X wave wasn't a triangle at all. It was a well, a WXY pattern really, almost a zigzag. So if I just show you the 2014 X wave was this. It was almost a zigzaggy pattern, so it definitely wasn't a triangle. So it would differ from 2014 in that sense, but that's just something to have a look at. As I said, it's not my primary count, but that might be what the X wave does. So A, B, C, D, E, as opposed to A, B, C and end up here. Either way, it's a very good short soon, but not quite now. So we'll have to see how this plays out, and either way, the end goal is sub 5,000 Bitcoin. So I feel there's better opportunities ahead. Now the altcoins are just stabilizing. They're not really doing much. Perhaps they're consolidating, ready for their move up. There has been a bit of a sell-off though too. Now what I wanted to go over was the DXY. Now the DXY, as you guys know, I'm bearish on stocks, full stop. And I have said for quite some time now there might be a fifth small intermediate leg growing here, and that could very well be possible. There might be a very small high up to about 27,500, after which point we're going to get a very big correction. So I don't see why Bitcoin should be the only one staying afloat when the rest of the markets are going to be going down. I just can't see that happening. I can't see so much money flooding into Bitcoin as a presumed self-haven. When there's a deleveraging of the entire financial system, nothing survives, as you saw in 2008. So this might be what's going on. So this triangle pattern is almost complete, to be honest. A, B, C, D, E. So it's almost complete, getting ready for a move up. So this will be a very short-term leg, and I can't see it going much higher than 28,500. But that will then complete all these 5 legs. So you know, you can take the distance off the A, so 28,000 max, and 1-to-1 would be a truncated C wave here. So with that 5th leg finally being completed, that will then bring to an end a very long market cycle, a very long business cycle, which, I mean, really it started in 2008, so essentially it's 10 years. But if we say wave 2 was here, you know, it's a 3,000 day cycle, so very long cycle, you know, 8, 9, 10 years going on here. But the reason it's so important, because we're going into a recession, because if that's wave 1, that's wave 2, this has all been a massive wave 3. Okay, so we're going to bring to an end this entire wave 3, and then on a larger degree count, as you guys know, that will be wave 3. Then it will pull back to about here, and then it will go to 40,000, after which point there's going to be some real issues, and you know, Thanos is going to be clicking his fingers and taking over the universe, sort of thing. So it's very much going to feel like the end of the world then. So but that is a complete market cycle, and you know, inflation's creeping up, the DXY is getting stronger, the bond market, the 10-year yield is increasing, although short term obviously it's going to go down to propel stocks a little bit higher. So, and unemployment, it's just a matter of time before that rate increases. Now typically we get a recession when the discrepancy, or the difference between the very wealthy and the very poor is at the highest, and that's kind of where we are right now. So I'm sure if you guys look around you or watch the news, a lot of people are losing their jobs, and a lot of these big companies are going under. So that's just the way the credit cycle works. Please follow me on Twitter. I released the video, Mike Maloney's how the financial system works. It's very, very important. And you need to look into the works of Minsky. He was a Russian Minsky, Minsky. He was a Russian economist from the 1930s, and his model is essentially what we're following, really. You know, just a matter of time before this entire bubble was going to come to an end. So but in a recession, if you know it's coming, you can take advantage of it, and you can buy very, very cheap stocks and property and everything else down here, rather than paying for it at very inflated prices. So it's only an issue if you don't know it's coming. If you know it's coming, then you can protect yourself, and so that's kind of where we go, and that's why I'm so bearish. But short term, we got the Fed on Wednesday, so it appears we might get some bullish news, because this triangle needs to break. And now, as long as it stays above this high, as long as it stays above this high here, so if we say that's the A leg, that's the B leg, that's the C leg, that's the D leg, the question is, where is this E leg going to be? Now this 2612 is actually the it's the 61.8 retracement. Now obviously it had a bit of a sell-off yesterday, but as long as it maintains this low of 61.2615, we're definitely going to be going higher, most likely. The only other count is that might have been an A, this might be a B. Now it might truncate to go to 2588, and then it's going to go higher. So this is where you got to watch the market very, very carefully. The break of this triangle is going to be quite violent, and it will take the Dow to slightly higher new highs, and unfortunately it's going to trap a lot of people, because everyone's going to watch the news and think Dow's at all-time highs. They're going to flood back into stocks right before the recession kicks in. Now with the triangle, with Elliott wave, this E leg, regardless of what it does in the short term, either this is the bottom or it's going to go a little bit lower. It can't break this low here. So if this low here is invalidated, 2554, this entire bullish count or this bullish triangle is invalidated. So rather than looking at this low, really any stops need to be assessed underneath here, really, because this E leg can't go underneath here. Then it's not a triangle, then it's more like a 1-2 pattern, and then it's very, very bearish, and then we're definitely going to go down to 20,000. So this is just something that I'm looking at now. Triple leveraged ETFs are a good thing to play during this time. Obviously it's not financial advice, you trade at your own risk, I always have to say that, but this SPUU is the 2 times leveraged ETF off the SP off the S&P. So if we're expecting a bullish break, rather than buying SPY, where you might not be able to make as many gains as you would do. So let's just say you trade the SPY. Let's say you buy in right now on this price. You're only making 8.4% to the recent high. But if you buy the double leveraged ETF, you're making double that, right? And obviously there's a triple leveraged ETF. I believe it's called SPUL. Now, these leveraged ETFs are not designed for retail traders to hodl. You saw what happened with XIV. They are designed for the professionals to hedge their futures contracts. However, with that being said, those of you who traded JNUG a couple of years ago when gold was doing its thing, you know it doubled almost every week, it seemed. So there is money to be made in these ETFs, but you have to know what they're designed for, and you have to know what they're when to trade them. Now, this is a very long consolidation. So to me, it's risky, definitely it's risky, but if we're expecting a break here, and as long as SPUU stays above this low here, 45, and around about here, that's a very good entry, because you could put your stop right underneath here, and then you can trade this all the way up. And then what you do, you just follow the SPX. You let the SPX guide you, and then it'll tell you when to get out. So very risky play. As I said, these triple leveraged ETFs, they're not designed for your benefit. They're not designed to hodl. They are simply designed for the professionals to hedge. However, if you know how they move and you're expecting a good breakout, they can be something that can be profitable if used at the correct time. So, and obviously if it breaks this, then the entire account is invalidated. So that's just something to have a look at. But they're not designed for long-term portfolio holds. They're designed to go to zero, mathematically anyway. That's why in JNUG you get all these reverse splits, because they have to reverse split it, because it will go to zero. So what we're looking at here, so we're looking at this. So this is hidden bullish divergence, yeah? So you got RSI going down, weekly lows going up. So this is hidden bullish divergence. In the end, the SPX is going to go to around here, just under 3,000, and then it's going to have this massive decline. So this is where the professionals are getting out, which is why I got out with them over here. This is purely going to be a speculative, very, very small wave 5, led by retail money. Unfortunately, the SPX is going to go here. We're going to get a massive divergence. Then we're going to get the recession that we've all been waiting for. So, and this is going to be an intermediate wave 5 to complete this, primary wave 5 to then complete an entire bull cycle, 1, 2, 3, 4, 5. So it's very, very small minor wave 5. In the end, stocks are done for, and the SPX will go back down to 2,000. And unfortunately, this recession, the way that the economy is designed, money's gonna get more expensive as money leaves the system. As such, banks make less and less loans, fewer and fewer loans, and the LIBOR OAS is also going up. So banks are not wanting to lend to each other. That's a very bad sign. So it's not going to be good, and unfortunately many people are going to, as always in recessions, end up bearing the brunt of this. But if you know what's coming, you can protect yourself and not make any risky investment decisions at this level, such as buying property right now, such as buying a new car, whatever, buying stocks at this level. You just got to be very, very careful. It's purely a trading market right now, and then long-term investors can then get back in here ready for the move up. So I don't see why I should be bullish on Bitcoin if the major markets around Bitcoin are just burning down. I don't see why Bitcoin's going to suddenly be the only one to survive. And if anything, Bitcoin has been leading the rest of the market down. So Bitcoin, the minute Bitcoin dumps, the SPX will then follow it. So Bitcoin, if anything, is a leading indicator. But at the end of a recession, that's when things are very cheap. So if you bought property all the way back down here, you would now be up 3, 4, 5x. So, they call them recessions, but that's just the way the fiat currency system works. You pump up the market, you boom, then you take money out of the market and then raise interest rates, and then people aren't circulating money in the economy because they're paying off their interest, which is all connected to a fake loan. And then the banks then repossess houses, so the banks extract all the real wealth, the land, the property, and everything else. So it's a very cunning system, but if you know it's coming, you can take advantage of it. And we saw what happened here in 2008. It's quite a hefty decline. I mean, what was that? Yeah, 57%. It's quite a hefty decline. So and we know what chaos there was in the economy. So it starts to spread like a Californian fire, this. So once money starts leaving the system, because it's so leveraged, it doesn't take long for bad things to start happening. And if you're in a lot of cash down here and you're liquid, you can then take advantage of this, and then you can buy stocks, property, whatever else. So everything needs to reset. This is the second longest bull market in human history. And in the end, you know, the Dow's going to end up somewhere between 16 and 18,000. So you're going to get a correction, 32%. So we are obviously massively overdue this. But as I said, if you know it's coming, you can take advantage of it. So because of that reason, and that's one of the major reasons, I can't yet be bullish on Bitcoin. Now, I'm not fear mongering here. I'm just telling you how it is, because you know, that's just the way to do things. I don't care about followers and such. I just want you guys to understand what is really going on, in my opinion anyway. I mean, I might be wrong. Bitcoin might suddenly go to 20,000, but I don't see why Bitcoin should be 20k and the rest of the markets are going down. It doesn't make any sense to me. And obviously the Dixie, which I've been harping on about for a long time now, is you know, it's broken this very long trend line. The minimum it's going to go to is 96, 97, and then we'll have to see what happens. Is that all a wave one? Is that going to be wave two, and the Dixie going to end up here? Or is it just a massive WXY pattern, which it takes it to 110? So I've got two counts here. Either way, it's bullish, and that's going to lead to some problems too. So you know, unfortunately, this fiat system, I mean, this is why everyone's so bullish on crypto, because in the long term it will be the future. But unfortunately, price of Bitcoin doesn't necessarily dictate what the fundamentals are right now, and there's no fundamental reason for Bitcoin to be all the way up here, and not right now anyway. Soon it will be, but not right now. So yeah, I mean, that all looks very impulsive, isn't it? So we'll have to see how this plays out. This could very well be the bottom. That's a 1, that's a 2, that's a 1, 2. But I think short term it's probably going to end up coming down, only because this Fed meeting as such, yeah, it's going to find some resistance soon. Although it is looking very bullish, so that may not very well happen. We might very well have found the fifth wave here, as I said a long time ago, 88. So let's just see how it plays out. The previous wave 4 was here, so 92.50 is where some resistance is going to creep in. So if it is going to roll over, it's going to roll over pretty soon. But once again, that might just be a bullish retracement, so that might just be a healthy correction. Usually going into a Fed meeting, you just flip. You just do the opposite of what happens going into the meeting. So if going into the meeting, the DXY is going up, that means it's going to go down either just before or after. And if before the meeting stocks are going down, that means they're probably going to go up. So, but this is getting really overstretched here on many levels. So, and the daily it's reached overbought, which it hasn't really reached since 23rd of the 11th. So yeah, I mean, that's obviously going to sell off before the meeting, because you just do the opposite of what, yeah, I mean, it just looks really overextended here. So I can see this pulling back. How much it pulls back, I'm not sure. We'll have to wait and see. Let's say it hits this resistance line, maybe it'll pull back to 90, 91, somewhere around here, and that's the previous swing high over here. So those are my trades. Obviously with DXY going up, then the euro dollar is gonna go the opposite way. So this is getting very oversold here, so this is a good trade to the long side. But once again, it's very risky because you're trading against the trend, but there is some divergence building up here. Daily has reached oversold as well, so yeah, it seems a little bit too far stretched. So reversion to the mean always happens just in life in general, so you always get a reversion to the mean. So let's see where euro dollar is going to end up finding some support. Swing high here, 119.50 weekly. This high here, this position here, yeah, possibly there. Yeah. So this is purely short term. I mean, in the end, the DXY is going up and the euro is going down, but very, very short term from a trading perspective, you can take advantage of these oversold and overbought positions. And if we just say this was an impulsive wave, you can take your magnet mode, touch it onto here, touch it onto that low, touch it back onto here, 1.618, and then the next one is 2. Yeah, so very, very oversold here. It's definitely due some sort of bounce, not a heavy bounce, but it's probably worth at least, I mean, how many pips is that? That's about, what, 300 pips, 400 pips or so. Yeah, it's definitely worth a trade, but you just got to keep on stalking it out and get the best trade possible. 1, 2, 1, 2, 3, 4, 5, 4, 1, 2, 3, 4, 5. So yeah, this is getting really oversold here. This has made a complete 5-wave cycle. It appears it's pretty much done all of this. 1, 2, 3, 4, 1, 2, 3, 4, 5. So it's basically, it's definitely on the way 5 or 5. The question is, has it made its full 5 legs of 5? Probably not, but it's getting close. It's definitely getting close. It's just a matter of time before the euro finds some support around here, and then it just makes its way up. So it's definitely worth a trade to the long side. I can't see 5 complete waves in here. Maybe it's just carving out a wave 4, then it can make one new low, and then that'll be the shakeout, and then everyone's going to go long. So but it looks as though it's pretty much done, so expect a retrace in the euro. So yeah, it's a good trading opportunity. Anyway, I'll leave it at that. Those are my thoughts for the general market. Everything is coming to fruition, as I've said, and I advise everyone to follow me on Twitter. Look at the last video from Mike Maloney. It's a very important video, and I think everyone should have some understanding of the major markets. Okay, Bitcoin's great and it's definitely going to be here in the future and stuff and everything else, but you need to understand how money really moves, and you need to understand how markets move, basically. And a $500 billion market cap asset class isn't gonna stay afloat while everything else around it burns down, so it doesn't make any sense to me. So yeah, it's going to be interesting summer, and then August, September, there's going to be some issues and the Dow will go down. So those are my thoughts. I'll leave it at that. And as I said, if you guys are interested, you want to pay my crypto, just get in touch with me. And the Shopify store, everything's automated. Just get through. The discount code is Bitcoin. That's 50% off for the next couple of weeks or so. And I'll see you guys soon. Good luck in your trading. Do your own research and always try to educate yourself, not just with Bitcoin, but with the major markets. Once you understand how the major markets move and correlate that with Bitcoin, you'll do really well, both in terms of trading as well as investing. And if there are stormy waters approaching, and there's a storm approaching, then it's never a bad time just to assess your risk and assess where you've got your money tied up. But looking at it, non-financial advice, I don't think anyone should be risking any major investment moves at this time. After a recession, things get very cheap, and that's when those who are liquid, like the wealthy with plenty of cash, they come in and they scoop up the bargain. So unfortunately, to do well in life, you got to think like the wealthy. Simple as that. And if you don't, then you'll just be like the 99%. Okay, I'll see you guys soon.